Good morning, everyone. Good morning here in United States and good evening in the Philippines. Um, the topic for today, guys. Before anything else, I am sorry to my loyal fans. I'm sorry for not responding all of your messages and wondering what happened to me. Why I have not have um, blogs going on or lives going on. So guys, folks, I would like to apologize. I want to apologize to all of you because it has been hectic for me. I got a full-time job now, and between that and my taking care of my kids as a single mom, you know how that is. If you are a single parent, you know what I am talking about. So I am so sorry, guys, and I know that I have a lot of messages wondering or what happened to me. So today I would like to share a good tips, especially for single parents, single mom like me. Um, a tips in your financial area of your life. It may not help to all of some of you because you have your own strategy when it comes to your budgeting and when it comes to your credits and all of that credits, um, and I don't want it to be sounds like I am bragging about my credit score, but I just want to share, and I would call it like how to have an excellent credit score, basically. So when I started having to build up my credit score, um, I was I was 29 years old, and I was here in United States. That was year of 2007. I bought um, I bought my very first vehicle at the car dealership. Although it wasn't really my first vehicle, because my very first vehicle when I had my driver's license or when I got my driver's license, I bought a vehicle from someone else. But talking about buying it in a dealership is totally different ball game, right? So there are 5 categories of credit cards credit score. I mean, number one is poor. Number two is fair. Number three is good. Number four is very good. Number five is excellent or exceptional. So when I bought my car, for very first car at the Ford dealership, my credit score was in the good category, and I don't know why. I guess because I never really have any credit in my life, and all I had done was just paying my utility bills on time or ahead of the due date. So I guess that build up your credit score. So how did I maintain my credit score from being good to very good and to excellent? Because all these years, ever since when I was 29, my credit score never really go down to the poor category. It's always been good or very good. It's always stays on very good, actually. And then so how did I maintain that? Okay, I maintain my credit score from being good to a very good by paying my utility bills way ahead of the due date. Like for example, you receive your utility bills a week or 2 weeks ahead before the due date pay. Well, I don't wait. I always pay it either 7 days ahead or 10 days ahead, because remember they sent you your utility bills either 2 weeks ahead. So 5 to 10 days ahead is I pay it. Because why? I use my credit card because my credit card has a power reward and cash reward. So I had two major Visa credit card, not to be brag again. So remember, there was a time that before Christmas I never really have a job. So But even if I have a job, I always do use my credit card. So because why? Just to get a reward, cash reward. Because for every dollar you spend, you get a 1%. And if I use my credit card to fill up my gas in my truck, I get 3%. And then 1% if I buy groceries and all of that. So really, what I really use my credit card for is to pay bills, buy groceries, and fill up gas. So just with that, I accumulated a lot of cash reward. So that is why I use my credit card. And of course, that's the only way you can have a good credit score, because why? Well, for every time you use your credit card, and then of course, like for example, if I spend $400 on credit card, well, I would always put the cash back to the credit card. That way, I do not have an amounting balances on my credit card, because I mean, I always, of course, make sure that whatever charges I put on credit card, that's the cash I would put into it. Because like for example, you're paying your bills, right? You're paying your utility bills. Well, you know how much cash you have, so and that's how much you had to charge on your credit card, right? Pay, like for example, you have utility bills worth of $500. Well, let's say the gas and the water will not be on the credit card, because sometimes they do have charges if you use your credit card. So for water bills and for some other thing like vehicle payment, I don't use my credit card, because they will not accept credit card. I mean, although they do, but they do charge like $3 or something. So I don't do that. So anyway, so that's that. Using your credit card, and make sure putting the cash back right into it, is really a good way of having your also cash reward, and also your credit score going up, because you're not gonna have an amounting again, I keep repeating myself, you're not gonna have an amounting balance, because you know how much utility bills you put in your credit card, and you always have a cash to pay your utility bills. You have to make sure you put it back onto your credit card. And for everything like I do, how I do it, I always do use my credit card. And I leave my cash alone in the checking. And when I'm done, paying my bills, utility bills, and then like 5 days after, I will put my cash right back to the credit card. And I get a cash reward, you see? So it's better like that. And it might not work for everyone, and that's probably not how you guys do, but that is how I do. So it doesn't mean it works for everybody, right? Because I never really use cash, and I never put cash in my wallet, because I always don't have cash all the time. So, and whenever I do have cash, like for example, today is payday, and I would still not use cash. I would still use credit card. And then after I use my credit card, I make sure I put my cash right back to the credit card. So then after that, I get my cash reward. Now, that is how I manage to have a credit score, a high credit score, or maintain my very good credit score. Now, another thing, paying the vehicle loan. Okay, my vehicle loan, always the due date every the 18th of the month. And like for example, our payday at work, although I have not been really working for several months. Okay, of course, when I do work, I save up money. So I do have a little cash that I have been saving, because remember guys, I don't use cash, I use credit card. So for a while there, I have not been putting the exact cash amount to the credit card that I have been charging, a lot, because I always wait for the cash, for the good amount of cash to put right back to the credit card. Well, since I have not been working for several months, I did not have enough cash. So the cash that I have, I save it up to pay my vehicle's payment. So what I do, or what I did, is I just pay the minimum balance of my credit card instead of putting the whole amount of how, like for example, I was paying my utility bills to my credit card and I did not have the right exact amount of the cash. So what I did is I just pay the monthly balance of my credit card. And then whenever I would receive, like for example, my income tax, then that's when I had to pay off everything, you know, that I charges in my credit card. So now, paying the vehicle loan. Okay, every 18 days of the month is my due date of my car loan or vehicle loan. Well, I always do pay my vehicle loan or car note like 10 days or 18 or 20 days ahead of the due date. That is what I do. So when that happens, when you pay your credit or your car loan or car note ahead of time, they will give you like a credit, like it will accumulate, you know, because they would only count, like for example, my car note is only $498. Well, I always been paying $500 out of, I mean, you know, I always pay ahead of time and also pay more than what my payment should be. So remember, the interest is every day. Your car note always draw interest every day. So if you pay your car note ahead of the due date, so for like for example 18 days or 20 days ahead, well, minus those 20 days of interest. If you know your interest, right? Every day. So all of that goes to your principal, or they would tell you, well, you have no balance. Like me, I do not have a balance. I'm not supposed to pay my car until May and it is now March, right? I don't have a balance even though I still have a car note balance, meaning like for you to pay monthly, I don't have a balance until May. So March, April, May, so that's 3 months from now or 2 months. So but I'm still paying it. So I did pay it already, and here it is. It's not even the 18th of the month. It's already been paid. So now I'm not gonna have any payment until probably June, you know, but I keep paying it. So this is why I have an excellent credit card or credit score, I'm sorry. Because why? I keep paying it. I keep paying it ahead of time and more than the amount of what I should have paid, especially on my vehicle. So watch out for those three credit consumers, you know, the TransUnion and the Equifax, and now I'm using also Credit Karma because that is where I am getting my, of course, the FICO from my Bank of America is using FICO, you know, and that's where I got my excellent credit score report through my Bank of America. And so anyway, and this is why my credit score went up very high, like all the way to the excellent or exceptional, because I am paying my vehicle loan ahead of time and more than the amount I am supposed to pay. So again, that is 10 to 20 days ahead of the due date. Because remember, for every day, your car note draw an interest. So, and that is how, of course, the loan company is not happy with me because they're not making money out of me much. Because I don't let, you know, I don't wait for the close due date before I pay. Because I'm thinking about the interest, the everyday interest of my car note. So that's that. Now, somebody asked me a question. Does refinancing, because you know I refinance my vehicle also. I had my loan from CarMax and now I refinance it not to lower the interest, but to lower the payment. Because again, when I moved down here from West Texas, I have not have a job for like 3 months. 3 months I did not have a job, so I have to refinance my car, and I didn't get it to go down the interest because the interest is very low already anyway. Because again, I have such a good credit score, so the interest was lower, and they couldn't go down it anymore because the vehicle is not really brand new anymore. You know, it's you know 5 years old, so they could not go down to the interest, but they lowered the monthly payment of it, which is more advantage to me. So from $498 monthly payment, they lower it to $329. But I am still paying the $500 because I wanna pay it quickly. So of course, ever since then, they never really make any good money out of me because I keep paying it 10 to 20 days ahead. I do not want any more interest much to it. So did it lower, does refinancing lower your credit score? I would answer yes or no. Yes, because at the time I did not have a job and I could not pay it. There was 1 month that I did not pay. When the refinancing process was done, that first month, because they give you like 2 months or 3 months without paying it, you know, so they can at least make money out of you, the loan company. So for 3 months they told me I don't have to make a payment of it after the refinancing done, you know, but I did. After the first month that I did not pay for, and the second month I did pay it, you know, because I don't wanna build, you know, I don't want them to make a lot of money interest, you know, for me not paying. So anyway, there was only 1 month that I did not pay. So yeah, my credit score went down to, instead of very good, it went down to the good. I had like 702 only, instead of, I always have 789 to like 800 is my credit score. So yeah, it did go down just for like 1 month, 1 month or two. My credit score went down to the good category, but it never went down to the poor. So, and ever since then, I keep it always on the very good category. And so here lately, I'm gonna show you guys the screenshot of my credit report, because I don't want you guys to say, oh, I'm making it up. So, and I was gonna print it so I can just show it like this, you know, but my printer doesn't work for some reason. So I have a screenshot, and it might be a little harder for you guys to see, but yes, I did finally. This is my second time ever in my life. I am now going to be 43 years old. Second time ever that I have an excellent credit score. Now, I heard that a lot of people in their 40s actually having a really bad credit score, especially around my age, you know. So I'm not to brag again. It is very easy, guys. It is very easy if you know the techniques. Like even if you can save up, like let's say 20 cents, 50 cents, you know, like ordering checkbook. I never use checkbook anymore for 7 years. Because why? I don't want to pay for checkbooks when you can do your banking online on your iPhone or your phone, you know. So I don't write checks, or when, like I said, I pay my utility bills, pay all my bills through my credit card. So I don't use checkbook ever at all. So I hope that I covered everything, and if there is something that I have not covered, you can comment down below, and I hope that this helped, especially to all single mom, single parent like me. And I hope I am very clear with my tips, and if not, you can ask down below and I can answer your questions. Thank you very much, and I hope that this helped. And you guys have a blessed day and have a good week. And thank you very much.